Kelowna's real estate market just threw us a curveball. Sales are climbing, but prices are moving in different directions depending on what you're buying. Last month, I told you that high inventory was giving buyers more options than we've seen in years and putting downward pressure on prices in some categories. In August, that story continued, but at the same time, sales picked up, including a 31% jump in one category, and prices in some segments are holding steady or even pushing higher. Inventory is still higher than normal, but it isn't as high as it was earlier this year. So as we head into September, the big question is, are we gearing up for a busy fall market, or will prices keep softening? Let's take a closer look. Residential sales in 2025 continue to outpace 2024, and we're up about 14% year over year in August. We are a little bit lower than we were in 2023, but at least we're on a better pace than we were in 2024, and more people are successfully selling their home this year than they were last year. In August, the number of single-family homes that sold was 157, which is up 6.8% year over year. Townhomes were up 4.4% with 47 sales, and condo sales were 31% higher than they were this time last year, and we had 101 condo sales in August. Inventory continues to be higher than it was last year. It's up 1.2% year over year, and you can see that we're starting to see that seasonal dip that we do see heading into the fall months. Breaking inventory down a little bit more though, the red line here shows what our active inventory is on a 10-year rolling average, and inventory over the last 2 years is significantly higher than it is over that 10-year average. And if we take a look at the benchmark composite price, I like this price because it combines all asset types and it really tells us what the market's doing overall. In August, that benchmark price came in at $792,000, which is basically the same as it was in July. So overall, the market is flat. That price, however, is down 12% from the peak that we saw in the spring of 2022, where it topped out at just over $900,000. However, it is up from where it was in October of 2024, and we are higher than the price was after the market correction at the end of 2022. Starting with the benchmark price of a single-family detached home, it was up 0.6% from July and came in at $1,050,000 in August. That's a slight move from the month before, but relatively unchanged. Over the last year, however, that price is up 3.2% year over year from what we saw last August. Looking at the benchmark price graph since the beginning of 2022, the price is down 11% from the market peak price, but as you can see down here on the right, it's up about $70,000 from where it was in October of 2024 and up from where we were this time last year. Going back over the last decade, single-family home prices in Kelowna have doubled since 2015 and are in fact up about $70,000 from where they were when the market corrected in the end of 2022. Over the last 18 months, 2 years, that price has been relatively stable, but it is on an upward trend. Moving on to the benchmark price of a townhome, it was down 0.4% month over month and came in at $721,000 in August. That price is also relatively unchanged year over year, only down 0.1%. Looking at the benchmark price graph, townhomes are down almost 14% from the market peak in 2022, and this market has continued to have a lot of volatility from month to month. We are up a little bit from that January 2024 price, which looks to be like the most recent bottom of this market, but that price has slid since earlier in this year. But going out over the last decade, those prices are up about 75% from where they were in August 2015, and we're back to about the price we were before the market peaked in 2022. Moving on to the condo market, prices in this segment continue to slide. They are down 1.5% month over month and came in at $497,000 in August, which is under that $500,000 mark. Going back over the last year, this price is only down 1.7% from where it was this time last year, but as I'll show you on the next slide, it's actually down this year because we did have a peak in the middle of the year. The condo benchmark price is down 10% from the market peak, And you can see in the spring, we had a bit of a price appreciation and prices moved all the way up to 516,000. But over the last few months, condo prices have continued to slide again as this segment of the market has a lot of inventory and probably the most here that we've had in over a decade. Going back over the last decade though, condo prices have doubled over the last 10 years. They are higher than they were before the market took off in the spring of 2022 and are relatively the same as they were after the market correction. But this market is sliding over the last 3 or 4 months, and we do need to keep an eye on that as we head into the fall. Next, taking a look at the price ratio, this is the price that a property on average sells for based on what the list price was. In the single family detached market, you've got a 97% price ratio, almost 98% in townhomes, and just over 96% in condos. This means, on average, a buyer can expect about a 3 to 4% discount from what the list price is versus the final selling price. Next, moving on to months of inventory, in the single-family detached home segment, we've moved up to 9.5 months of available inventory. This is a jump of about a month and a half over what we were the previous month. This could put some downward pressure on prices, but as we've seen in the graph, the benchmark price really hasn't come down in single-family homes lately, and this is not putting enough pressure on that segment of the market. What I think is happening here is the homes that are priced reasonably or what buyers are willing to pay are still selling, and anyone that's aspirationally priced or priced too high is just sitting on the market, adding to our months of available inventory. In the townhome market, we also have 9 months of available inventory, which is firmly in a buyer's market, and this is up 2 months from what we were in just July. And in the condo market, we've moved down to just under 9 months of available inventory at 8.8 months, but this is still strongly in a buyer's market. Keep in mind, this measurement of months of inventory only measures what's on the MLS system. So this doesn't measure what developers might have or things that people can buy in the pre-sale market. But just to recap, we're firmly in a buyer's market across the board, 9.5 months in the single-family detached home market, 9 months in townhomes, and 8.8 months in the condo market. So you could say on average we have 9 months of available inventory across the entire market. So to wrap this up, August did give us a bit of a curveball. Sales are clearly stronger than last year, with some categories seeing big jumps. But prices are moving differently depending on what you're buying. Single-family homes are holding fairly steady, and townhomes are flat year over year, but condos are still under pressure with prices slipping. Inventory is high, and months of supply shows we're firmly in a buyer's market across all categories. That means that buyers continue to have more negotiating power, and sellers need to be sharp with their pricing and their strategy if they want to see results. Heading into the fall, the question is whether this pickup in sales activity continues, or if higher inventory and buyer caution keep prices soft throughout the rest of the year. Either way, there are opportunities on both sides. If you're a buyer, you've got options and leverage right now. And if you're a seller, well-priced and well-presented homes are still moving. If you've made it this far, thanks for watching. And don't forget to subscribe and hit the like button so more people like you can see this update too. And if you'd like to see some of the cheapest homes in Kelowna available right now, check out this video right here. Thanks for watching. We'll see you next time.